Hey guys, what's up, folks? It's 4:31 p.m. on the East Coast. How are you guys doing today? Welcome back. Devon, Lisa Bowles, Aisha. Aisha's always here. It's always so nice to see you. Gondergal, can you guys hear me or see me? Hello, folks, from the beautiful city of Charlotte, in the beautiful state of North Carolina. Hello, what's up? Please drop a comment down below and let me know what stocks you want me to go over. Today we had a nasty day, guys. Most stocks out there ended up pulling back. Yeah, my audio is working out super good. Yeah, it was a nasty day. We'll talk about that. So welcome, UNH, AVGO. Hello from Cary, North Carolina. There you go. So you're super close from me. AMD, which also AMD was able to have a positive day today, slightly positive day today, as I'm seeing here. Yeah, it was a nasty day, guys, across the board. Hello, guys. From London, AMZN, welcome. So it's so nice to see people from all over the place, from around the world. That's great. And Apld is in Raleigh, North Carolina. What's up? I went to Raleigh in mid-December. Yeah, I think Apld. Yeah, we'll go over Apld. Man, I appreciate your knowledge very much from Florida. Of course, we are here to help. Nayi is in Atlanta, super close from me as well. Yeah, Texas, Cleveland, Ohio, Zoo, Zer, Daryl James, Atlanta as well. I guess that I met some of you guys last time we met here. We got together here in Charlotte, right? Some of you guys drove up to Charlotte and we got together. And Dina Burton is in Charlotte. Have we met in person? Dina, we should. Lanny Williams, Columbia, South Carolina. Hello, also close. Hollywood, Florida. That is, yeah. Awesome. And we have an international guest today from London. Ready for the next meetup? Of course. Yeah, sure. Sure. Awesome. Awesome. So let's get the party started here. Look, first of all, I want to, from Cuba? No joke. You cannot be in Cuba, right? You wouldn't have any internet connection. Am I the only one from London? It looks like. Yeah. Yeah. You would not be able to see me from Cuba, for sure. New Orleans. Yeah, of course. Of course. Hey, let me get this out of the way. So remember that 2 weeks ago, guys, I finally started a Patreon in English. You know that I have been running my Patreon in Spanish for more than 4 years. I have a very solid group of traders and investors in my Patreon in Spanish, and I've been dealing for years with some sort of an uncomfortable situation because some of you guys, or I should say many of you guys, have signed up for my Patreon in Spanish. And I have ended up reimbursing you the money because most of you guys don't know how to speak Spanish. And all of the information that I am posting on my Patreon in Spanish, in which I have more than 700 people over there. So all of the information that I post on my Patreon in Spanish is spoken and written in Spanish. And yeah, I was dealing with this situation. You guys were, like sending me messages. Hey, Alvaro, I just signed up for your Patreon. So how can I do in order to be with you, to be in touch with you throughout the trading sessions? And I mean, it was impossible, guys, because, all of the stuff that I post on that Patreon is either written or spoken in Spanish. So you have been telling me for years to start a Patreon in English, and I finally did it. And we have a Discord in English for those who are interested. As you guys can see over here, the link is in the description box of this video. I am narrating the trading session pretty much minute by minute. We have an unusual alerts channel, as you guys can see over here. These were the alerts that we posted today before the trading session opened. And the main reason for me to start the new server in English is this, guys. I am finally able to be in touch with you, finally able to answer your questions during the trading sessions. This is our main chat, as you guys can see over here. And the members of this new Patreon in English can ask me about any stocks, about the indices, about trades, about whatever it is. And I am able to answer every single question on a real-time basis. So this was basically the main reason why I started the new Discord. On Chris Saint's server, guys, we are 30,000 people. It's impossible for me to keep up with your questions. It's impossible. Impossible. And obviously, this is an option for you guys because I'm still very active on Chris Saint's server, as you guys can see over here, pointing out levels of interest for the SPY and some individual stocks. Did you guys see the level that I called out today on Tessie? Did you guys see this? 9:53 a.m. I told you about $320. So I'm still active here, guys. But what I cannot do on Chris Saint's server is answer you guys' questions. It's impossible. It's impossible to keep up. Impossible. 30,000 people. It's impossible. I cannot do it. So if you want to be in touch with me on a real-time basis during the trading sessions, and if you want to ask me any questions, and believe me, guys, it breaks my heart having so many messages from you, but so many messages. It breaks my heart, but it is impossible to keep up. I just can't. And I know that I have like 1,000 messages from you that I have not been able to answer because it's impossible. We are too many people. Lucky enough for my friend Chris, obviously, right? Because his server is killing it, guys. But now with my own server in English, as you guys can see here, I can easily be in touch with you during the trading sessions and ask whatever you ask me, as you guys can see over here. So keep that in mind. The link is in the description box of this video, of this live stream. Okay, so I already addressed the situation about my Discord in English. So let's get into this. Take a look at what happened today, guys. So we had a red day, I would say a regular red day across the board, we can say. Take a look. The Nasdaq went down 0.98%, the S&P went down 0.85%, and the Dow Jones went down 293 points or 0.68%. If we take a look at the closing of the indices, we can make a case that we had a red day, nothing crazy. But take a look at the breadth that we had today in the markets, guys. Nasty. Nasty, nasty, nasty. Why do I say that? Take a look at this, guys. Let's take a look under the surface. This is the S&P 500. As you guys can figure, inside the S&P 500, we have 500 stocks. Well, today, guys, out of 500 stocks, 413 stocks went down. Ugly, ugly, ugly. And 89 stocks went up. Let's take a look at the Nasdaq 100. Take a look at this. Inside the Nasdaq 100, we had 88 stocks going down. Ugly, ugly, ugly. And only 13 stocks went up. It was ugly. It was an ugly day. If we take a look at the closing of the indices, we could, as I just said, guys, we can say like, okay, today was a regular red day, a tiny pullback. But when we take a look under the surface, let me keep going. We can say that today Today was an ugly day. Take a look at the Russell. No, I just showed you the S&P. Okay, the Russell 2000. Take a look at this. 1,474 stocks going down and only 444 stocks going up. Ugly day. So why do I bring this up? Because, and this is a discussion that I was having today with the members of our Discord in English, when we see these kind of ugly days, guys, in which most stocks are going down, you cannot look at individual stocks. So some guys on our Discord today were asking me when the market started to pull back, and when we could easily notice that most stocks were going down, some guys were asking me about Tesla, or they were asking me about Oracle, for instance. And I was telling them, take a look at the indices. When we start to see this kind of behavior, guys, through which most stocks are simply tracking the S&P 500, the natural levels, or the potential levels, I should say, of support and resistance that we can maybe, point out on a technical chart might not be acting as such if we don't keep an eye on the S&P 500, on the SPY. Do you guys get the point that I am making here? So if you start to notice, guys, that Tesla and Nvidia and Apple and Boeing and and Oracle and most stocks out there are going down, you need to really forget about those stocks and keep an eye on the SPY. And if you want to take a trade, or if you want to start a trade with Tesi or with Nvidia or Palantir got demolished today, by the way, or or Palo Alto Networks, or whatever stock it is, you need to reconcile the level of interest that you're keeping an eye on an individual stock such as Tesla or Apple or whatever, with a potential level of support for the SPY. If you don't combine those two factors, you will be losing money. So whenever you notice, guys, that most stocks start to go down and the SPY follows suit and the SPY also goes down, you need to focus on the SPY, on the ETF of the S&P 500. This is super important, and if you are actively trading the markets, you should already know this. Super, super important. So, obviously, and I am not going to, I am not going to be talking about this, about that, or about this during this stream. Of course, the markets are kind of freaking out with the Middle East situation. So Israel is going to attack Iran, and Iran is going to attack Israel, and the U.S. is going to get involved in the conflict and stuff like that. Usually, and for the most part, and this is something that I have been talking about with the members of my of my two patrons, let's just put it that way. These kind of situations, Middle East related, are usually end up being some sort of nothing burger. I don't have a crystal ball, guys. I don't know what is going to happen in the Middle East, but for the most part, these kind of pullbacks that are related with tensions in the Middle East and Iran and Israel and stuff like that are usually a buy the dip opportunity. I don't know if that is going to be the case this time around. I don't know if Israel is going to go all in against Iran overnight. You never know. Maybe this time around is different. You never know. But for the most part, and believe me, I have seen a lot of these kind of situations. This is usually a nothing burger. These kind of dips are nothing but a buy opportunity, or a buy the dip opportunity. We'll see what happens about that. When it comes to tomorrow's trading session, you need to keep in mind that tomorrow we have the Federal Open Market Committee of June. So what is going to be occurring tomorrow? At 2 p.m., we are going to know, and we already know what that decision is going to be about. We will get the Federal Reserve decision about interest rates, and interest rates will remain unchanged. We already know that. And at 2:30 p.m., Mr. Money Printer, Papa Powell, is going to be addressing the country. And that's when volatility usually picks up. Usually, for the most part, when we have these kind of trading sessions before or through which we are waiting for a Federal Open Market Committee, and remember again, 2 p.m. the decision comes out. That usually doesn't move the markets a lot. And then at 2:30 p.m. we are going to be seeing Mr. Powell addressing the country. There will be a press conference. So before 2 p.m., we don't see a lot of movement in the markets. Usually, that is usually the case. We'll see if that actually plays out like that tomorrow, because obviously we have this situation in the Middle East and in Iran and Israel and the third and a war that is going to occur or whatever. I don't even want to say World War III, right? Because no one wants that to occur. But so keep that in mind, that maybe tomorrow's session before noon might be a bit slow, and we might have some fun especially after 2:30 p.m. That is something to keep in mind. So what's new is that end the day in little red, we don't feel so bad. Yeah, I mean, it was a nasty day. If you were trading individual stocks, it was a nasty day. Yeah, it was a nasty day. Again, the closing of the indices don't say, the closing of the indices do not reflect what happened under the surface. It was a nasty day. Nasty day. And take a look at the 11 sectors that trade inside the S&P 500, guys. This goes to show that what I am telling you is what actually happened. Take a look. So out of the 11 sectors that trade inside the S&P 500, only one sector went up today. What sector was that? Energy. Yeah. Oil went on a tear. Precisely because of the concerns about the situation in the Middle East. Not oil. Energy actually went up today 0.93%. But other than this sector, the remaining 11 sectors that trade inside the S&P 500, all of them went down. And some sectors did go down a lot. Consumer discretionary down 1.72%. This is a sector in which Amazon and Tesla are the heaviest holdings. And healthcare went down 1.65%. Very nasty day across the board. And we had a lot of news, coming out about the situation on the Middle East. But I don't know, guys. I'm not gonna make a bear case here based on a geopolitical situation that usually ends up being a buy the dip opportunity, right? We'll see if that is the case this time around. When it comes to the SPY, guys, quickly, today the bears made some progress. This is an uptrend as of now. The SPY is trading above all the moving averages except for the 5 DMA. This moving average for intraday trading is very important for me, guys. And take a look, the SPY is going down after hours. Who knows if we have news coming out. So the 5 DMA, the 5-day moving average, is signaling as of now $600, 650 cents. So the fact that the bears were able to close the trading session below the 5 DMA, the 5-day moving average, is positive for the bears. Let's just put it that way. And by the way, guys, and I know that many of you guys work with the pivot that I point out every single morning. What was our early pivot today, guys? What was our early pivot today? Take a look, guys. Let's reconcile this 1-day 1-minute chart of the SPY with the pivot that I pointed out earlier on today. Take a look. Let me pull up here the information. Take a look. So this is the channel on my server in English in which I am narrating the trading session for you. Take a look at the time, guys. And I also pointed out this information on Chris' server. So take a look. Let me see. Do you remember our pivot today? Let me see. Wow, so much information, guys. So here, okay. Where is it at? Okay, take a look. Take a look at the time that I posted this information, guys. 8:40 a.m. Our pivot today comes in at $601.50. There you go. Danny has it. What did I say at 8:40 a.m., guys? So while the bulls can sustain price above $601.50, they are in control of the tape. And then I said, look, take a look at the time, because the trading session opened and we noticed that the bulls were struggling at bursting above $601.50. At 9:34 a.m., I said, they are below 601.50, so be careful here and keep an eye on 6,000 points on the SPX. This is the cash index of the S&P 500. At 9:42 a.m., I said, still below 601.50, so I am still being careful here. And let me see. Take a look on Chris Saint's server. I told you about this level, or I warned you about this level, and today before the session opened, guys. Take a look. Keep an eye on 601.50. Take a look at the time, guys. 9:12 a.m. Keep an eye on 601.50. It's a line in the sand between the bulls and the bears. And what happened, guys? Take a look at today's high. 601.55. The bulls made a test on 1, 2, 3, and 4 occasions, and they were not able to burst above 601.50. Super clear. I warned you guys about this level before the trading session opened. So if you kept an eye on my comments, you had a good idea about what was going on today in the market. So the 5 DMA was broken today to the downside, which is negative in minor time frames. But if we take a look here at a 4-hour chart of the SPY, this is an uptrend above all the moving averages. So if we pull up a 4-hour chart of the SPY, other than the fact that the 5 DMA was broken to the downside, which makes the SPY a bit guilty, but other than that, this is a good looking chart, and we'll see if maybe tomorrow we open the session above the 5 DMA. And remember that since tomorrow we have the Federal Open Market Committee of June, most of the trading action might be taking place afternoon. That is something to keep in mind. Okay, so what stocks, what individual stocks do you want me to go over? Let me know. While I take a sip of this Sprite here. Okay. Apld. Yeah, you guys were asking about that stock. Applied Digital. Let me see. Apld. Okay. So it went down today, as most stocks did, 5%, and it closed the trading session at $11. So I don't like the short, guys, and I already told you that I work a lot with the 5 DMA, the 5-day moving average, which happens to be this white line that I am pointing out with my mouse. Take a look at the slope of this 5 DMA. It is downward sloping, so this stock is guilty until proven innocent. Would I be willing to take a trade? Would I be willing to go long Apld here? Yes, if the bulls show strength. How can the bulls show strength here? Well, by bursting above the 5 DMA, by recapturing $11.70. That would be positive, and that situation could be potentially attracting buyers into this technical chart. Take a look at this other moving average, the 20 in pink. It is upward sloping, so this is a potential level of support. Let me draw a line here. Say that Apld keeps going down. And we got good news about this stock recently, guys, right? They signed a deal or something, or they announced some sort of partnership with CoreWeave, which, by the way, has been going on a tear. And it kept going on a tear today, despite the fact that most stocks out there went down, which is showing a lot of strength, a lot of technical strength. So I would be curious about the bulls being able to hold this upward sloping, this rising 20-day moving average as support near $10. If this stock breaks $10 to the downside, this is very bad news for the bulls, and that situation could be unfolding or could be giving rise to a further drop in the case of APLD. So ideally, I would like to see this stock above $11.70. That would be a bullish development. I would be curious about potential support near 10 bucks, which is also a fat number that is coinciding with a previous level of support back from early June, and with this rising 20 DMA, and this stock would become a no-touch if this rising 20-day moving average is broken to the downside. That situation could be attracting a lot of sellers into this technical short. Let me take a look at the market structure of APLD. Let's take a look at the supply and the demand of Applied Digital. Do we have it? Do I even have this available, guys? Let me see. Because in the case of some stocks, I don't have the market structure available, and that is the case, unfortunately, of APLD. But lastly, let me take a look at some anchor VWAPs to see if we can visualize important levels of supply or demand for Applied Digital. So let's see. Let me display an anchor VWAP, an anchored volume weighted average price line from all-time highs for Applied Digital. So this stock reached $15 back on June 6th. And, oh, my bad, guys. There you go. So if we take a look at an anchor VWAP that comes from all-time highs, this is an all-time high for Applied Digital, right? Is it? No, it is not. I mean, this is a recent high, or the most recent 52-week high for Applied Digital. So an anchored volume weighted average price line that comes from June 6th, when this stock reached $15.30, is showing us a price of $12.82. So what information is this anchor VWAP sending us? Well, that the average market participant that started a position on Applied Digital on APLD, when this stock hit or reached its most recent 52-week high at $15.41, has an average price of $13. So we know that might be a potential level of overhead supply from which Applied Digital could be pulling back, because the average market participant that started a position on Applied Digital back on June 6th at $15.36, as of now has an average price of $13. They are losing money. So they become a potential level of supply or a potential level of overhead resistance. So if I started a position on Applied Digital over here, I would rather see, guys, the buyers being able to burst above this level, $12.80. So for Applied Digital, for APLD, to be able to look very bullish, I would need to see it above $12.80. So above this previous level of resistance back from June 12th, $13 approximately, and above the 5-day moving average. There could also be a trade here from the 5 DMA, $11.70 up to $12.80. Yeah, this could represent an 8% profit trade. So if the bulls can recapture the 5 DMA, there could be room up to this anchor VWAP that I just showed you guys, that is signaling as of now $13. Yeah, from $11.70 up to $13. This could represent almost a 10% profit trade. But for APLD to be completely out of the woods, these buyers that are trapped over here with an average price of $13 would have to be surpassed. So APLD would have to burst above $13. So not a good looking short, but we'll see what happens. I would be curious about this stock finding support at this rising 20-day moving average, 20 DMA. Okay, what other stock do we see here, guys? Amazon. Amazing Amazon. By the way, take a look, guys. This was an unusual options alert that we notified to our members, to the members of our Patreon. Take a look, and this is an alert from yesterday. Let me show you. And if you want, you can take a screenshot of this alert. I think that this was alerted yesterday. Take a look. So these were the unusual options alerts that we posted on Patreon yesterday. Take a look, June 16th. And one of those alerts was this one, Amazon. So last Friday, someone invested $3 million on call options of Amazon expiring on September 19th with a strike price of $220. Did this alert work out? It did, because I actually traded this alert yesterday. How do we know that this alert worked out? Take a look. Let me pull up here a 5-day, 5-minute chart. So Amazon opened the trading session yesterday at $213. So from yesterday's open up to the highest level that Amazon reached today, this stock went up 2%. Take a look. Market opened yesterday, 213, and and today, Amazon was able to go up to $218. A 2% move in just pretty much one trading session, guys, as you guys can see over here, because this high was made earlier on today, around 9:50 p.m. So 9:50 a.m. Sorry, rather. I actually took a trade on Amazon here. This chart of Amazon, guys, is starting to look very bullish. Amazon went down today, not much, 0.59%, and it closed the trading session at $214.82. So Amazon, as of now, is trading above all the moving averages, above the 50, the 200, the 120, and the 5-day moving average. So a potential process of consolidation, and let me draw a line here, guys. And this is a level that I was discussing with some members of our Discord today. So as long as the bulls of Amazon can sustain price above this 5-day moving average, $214, take a look at how this 5DMA is actually coinciding with a previous level of resistance for Amazon back from mid-May. This situation could be attracting more buyers into this technical chart. So say that Amazon consolidates above $214-ish. The next potential gap to the upside could be $219, which is a level at which Amazon failed on 2 occasions recently, as you guys can see over here. So above $214, this is a very good looking chart, and maybe we have higher prices coming up for Amazon. And by the way, guys, this stock is, let me see, half the highs. Amazon is 12% of the highs. So if we make a case here, guys, that the SPY might be headed to all-time highs, which could be the case. All-time highs, we're talking about $613-ish. Amazon should be going higher. So if you guys, if any of you is bullish on the SPY, maybe going up to all-time highs, once again, Amazon could have an appointment with higher prices here. Yeah, this is a very good looking chart. Let me take a look at the market structure of Amazing Amazon. What do we see here? And what's the strike price of the unusual call options alert that I just told you guys about? I don't remember. Let me double check on that. Oh, $220, guys. Yeah. If Amazon goes up to 220, that's a gap that I just told you guys about. This would represent a 3% profit trade. To the upside. Okay, Amazon, take a look at the market structure of Amazon. So this is a market structure chart. What I want to visualize in these kind of market structure charts are imbalances between the demand and the supply. Demand buyers, supply sellers. So the demand, or you guys can see the demand on top of this chart, represented by this blue shaded region that I am pointing out with my mouse, and the supply is at the bottom of the chart. Take a look at the supply going down and the demand going up. This is a very good looking market structure chart for Amazon that we can actually reconcile with the fact that Amazon as of now is trading above all the moving averages. This stock consolidates above $214 in regular market conditions, guys, with, without the markets freaking out because of the situation in the Middle East, and I don't know, maybe the market's freaking out because Powell says this or that tomorrow, who knows. In regular market conditions, Amazon consolidating above $214, I think that we have higher prices on deck for Amazing Amazon. Let me take a look at anchor VWAPs here for Amazon, guys. Do we have any important levels of potential overhead supply above the current price of Amazon? Let's go see. Nothing, guys. Take a look. Nothing. An anchor VWAP in the case of Amazon that comes from all-time highs. Keep in mind that Amazon hit $241 back on February 4th. is signaling as of now an average price of $198. So in other words, guys, the average market participant that started a position on Amazon when this stock reached its highest level or its highest price ever has an average price of $198. That implies that above the current price of Amazon, we don't have a lot of important potential levels of overhead supply from which Amazon could be pulling back because it is coming across with buyers that are trapped above the current price of this stock. So, yeah, above 214, guys, Amazon could be off to the races. Yep. 220. There you go. You got it. AMD, of course. We need to go over AMD for sure. Do you guys think or believe that this stock is really turning around? Advanced money destroyer. What do you guys believe? I am curious about your opinion. Is AMD finally turning around? This stock has been a monumental disaster, guys. A monumental disaster. And get this. So AMD, guys, has gone up since early April 71%. 71%. And yet still, this stock is, let me see, half of the highs. Wow. This stock is 42% of the highs. Unbelievable. Unbelievable. What a freaking disaster, guys. So look, I use a lot, and I think that this is a very important moving average for the institutions, or for most institutions out there. I use a lot the 200-day moving average, this red line that I am pointing out with my mouse. As you guys can see over here, it is signaling as of now $125. This is a critical spot for AMD. This is a technical chart that is starting to look very compelling, very attractive. Why is it? Because AMD as of now is finally, and after a long time, guys, trading above all the moving averages. Above the 50, the 100, the 20, the 5 DMA. Take a look at how the 5-day moving average is upward sloping. This is very positive. That implies that in minor time frames, AMD is under the total control of buyers. And finally, guys, take a look at this. AMD, guys, has not been able to trade above the 200-day moving average, guys. Take a look. Since September of 2024. Unbelievable. It's crazy. So the 200-day moving average was broken to the downside in October of 2024. And take a look. Nothing. This stock has been a disaster. So if AMD is able to consolidate above $125, yeah, we might have higher prices coming up for this stock. Why not? The next potential gap to the upside could be $132. This is a previous level of resistance back from early June of this year. So as long as the bulls of AMD can sustain price above 125, I would be very constructive about this technical chart of AMD, and maybe, and I don't know, AMD can can turn this situation around and stop being called advanced money destroyer. Yeah, we'll see what happens here. It is interesting. Let me take a look at anchor VWAPs in the case of AMD. I am curious about an anchor VWAP from all-time highs in the case of advanced micro devices. Wow, take a look. Yeah, we still have buyers trapped all over the place here, and rightfully so, guys. This stock is way off the highs. Why I cannot delete? Let me see if I can delete here some anchor VWAPs, guys. No, this is no longer important. Let me see. No longer important. Let me see. I would like to display an anchor VWAP from this low that AMD made back in early April. So take a look. This wide anchor VWAP, this anchored volume weighted average price line, and you'd better put this down on a sticky note because I know that many of you guys are thinking about All-time highs on AMD. Yeah, I got a message from one of you guys yesterday letting me know that you have shares of AMD at an average price of $105. Yep. And that person was asking me about all-time highs for AMD. Put this down on a sticky note. If we take a look at an anchor VWAP of AMD that comes from all-time highs, guys, this is a big level. Why is it? Well, because the average market participant that started a position on AMD at $226 back in March of last year has an average cost as of now of $140. These people are losing and have been losing a lot of money on AMD. What do you guys believe most of these market participants will do if AMD ever gets back up to $140? Yeah, most of them are going to be closing their positions, breaking even. So if you have winning positions on AMD, I mean, let me put it this way, and this is not financial advice, of course, but if I had a winning position on AMD, guys, and AMD gets up to $140, I don't know, in the upcoming week or in 2 weeks or something like that, I would be trimming some up there, to be honest with you. I think that the likelihood, and I always speak about probabilities and not about certainties, and every market participant should do that. I think that the likelihood for at least a tiny pullback at $140 is very high, in my opinion. But I mean, AMD is trading at $127, so we can also make a bullish case here. Closing candles and consolidating on a daily basis above $125 could be opening the door for a test of these buyers, of these back holders that are trapped at $140. Yep. And by the way, I was curious about this. Let me display an anchor VWAP from the April low for AMD. Take a look. Say that the markets, I don't know, panic. Because Israel is going to destroy Iran, or I don't know, Powell got in a fight with Trump, or Trump says that, or President Trump says that he will raise tariffs up to 500% because he wants to make America great again, or whatever it is, for whatever reason. Say that we see a decent profit taking in the case of AMD. Keep in mind, if that were the case, that the average market participant that started a position on AMD back on April 4th, sorry, I take it back. Back on April 8th, when this stock reached $77, has an average price of $105. So what happens here, guys? When an anchor VWAP, when an anchored volume weighted average price line is above the current price of any given stock, it is a potential level of overhead supply. Why is it? Because we have market participants losing money at that level. But when the opposite happens, when we have an anchored volume weighted average price line below the current price of a stock, those buyers are making money instead of losing. So they might defend price if we happen to see a retest of that level. Are you guys following me here? So say that, I don't know, we see panic in the markets and the semiconductors go down and Nvidia goes down and AVGO goes down, blah, blah, blah. You guys get the drill. If we see a retest of $104, that's showtime for the bulls of AMD. It could be bouncing back up from that level. Mm-hmm. What about protective puts at 140? Yeah, that's also a possibility. Yeah. Big level of overhead supply for AMD at 140. Big level, in my opinion. I don't know. Maybe AMD reaches $140, guys, on very good news. They announce, they announce a new chip that is going to compete with NVIDIA, and Bank of America upgrades AMD because AMD is going to be competing with NVIDIA. You guys get the drill. So, in regular market conditions, a retest of 140, I think that is a sell the rib opportunity. But I don't know. Maybe AMD goes up to 140 on very good news, or they up guide, they raise guidance, or something like that. Well, we would have to evaluate that, guys. I don't trade news, and this is also a sticky note material. I don't trade news, guys. I trade the shirts in front of me. That's the idea. But I understand, or I try to understand, how news could be affecting my stocks. You have to keep in mind that. For sure. Okay, now let's go over CoreWeave. This is insane, guys. Unbelievable. Unbelievable. Yeah. By the way, tomorrow we have 2 new IPOs coming out. Do you guys happen to know the ticker? If anyone knows, let me know. So, when it comes to IPOs, guys, some people, and I am guilty as charged because I have taken 2 or 3 trades on CoreWeave, but some very disciplined traders do not trade these tickers, these IPOs, until they have been trading for at least 6 months. So in other words, until we have enough technical reference in order to determine levels of support and resistance. In the case of CoreWeave, we can use the 5-day moving average because this is a 5 DMA. It works on minor time frames. This is a 1-hour chart. So the 5 DMA is a bit flattish here. The 20-day moving average is rising. This is a very good looking chart, but you have to be careful here, guys. First of all, this is a very volatile stock, and we don't have enough technical reference in order to be confident about potential levels of support and resistance in the case of CoreWeave. I can make a case that as long as this stock remains above $155, so above the 5-day moving average, the bulls are in total control of this technical chart. If I draw a line here, I can see that the 5 DMA is coinciding with a previous level of resistance that acted as such on 2 occasions for CoreWeave, back from June 13th and also back from June 12th. So we have 2 levels of resistance at which CoreWeave already failed, coinciding with the 5 DMA. So 155-ish, $155 becomes a potential level of interest for CoreWeave. Say that this 5 DMA is broken to the downside. I would be curious about this rising 20-day moving average. Take a look at this pink line. This is the 20-day moving average. It is signaling as of now $132, and this 20 DMA is coinciding with a previous level of support back from June 5th and also a previous level of resistance back from late May. Another potential level of support here for CoreWeave, 133. And don't chase it. Sometimes I see you guys feeling a lot of FOMO with not only CoreWeave, with what's the other new IPO, guys, that you are always asking about? Circle. Do not chase these stocks. And by the way, and I must be sounding like a broken record here, guys. Take a look at the implied volatility of CoreWeave. Do not buy options. Do not buy options here. Take a look. 128%, 133%, 139%, 110%. I have taken, I think, 2 or 3 trades with CoreWeave, but with shares and not with options. If you buy options here, guys, you're very likely to lose money. You need the trade to go in your favor right away because the implied volatility is too high, too high. When the implied volatility is above 70%, guys, we should be sellers of options and not buyers. This is important. Keep that in mind. And the same goes for Circle, for sure. The same situation goes for Circle. Yep. Okay. I'm surprised that you guys are not asking about Palantir. That's a miracle right there. Let me go over UNH. Oh, what a disaster. UnitedHealth. Let me see. Sorry, guys. The same stuff that I have been telling you. This is a major downtrend below the 200, 100, 50-day moving average. But in minor time frames, the buyers are trying to do something here. So as of now, they are holding the 20-day moving average as support, $305. But they are still struggling, guys, at holding price above the 5 DMA, the 5-day moving average. Look at this. The 5 DMA is signaling $312. This level is critical, guys. The 5 DMA in the case of UNH is ultra critical. And why is it? Well, when a stock, guys, can hold the 5-day moving average as support on a constant basis, that implies that the average market participant that started a position on that stock recently is holding that position opened. That is very bullish. That is important, guys. Why is it? Well, because that implies that the average market participant that recently started a position on that stock is foreseeing more upside. Do you guys get what I am talking about here? That's why the 5 DMA is so important for me, because it shows me conviction when it comes to the market participants that have started position on that stock recently. So what is going on in the case of UnitedHealth? Why is it losing the 5-day moving average constantly? As you guys can see here, the 5 DMA is a white line. Well, because most market participants that as of now are starting positions on AMD, as soon as they see some profit, they are running away. There's no conviction here about more potential upside for UNH. And keep in mind, guys, that this stock is like 1,000,000% of all-time highs. Take a look. So UNH is 51% of the highs. Despite the fact that this stock is trading 51% of the highs, guys, the fact that UNH has been struggling at holding a support, the 5-day moving average, is showing us poor conviction when it comes to the market participants that have started positions recently on UNH about potential more upside. So if I were you, and if I were thinking about starting a trade on UNH, I would need to see consolidation above this 5 DMA, 5-day moving average, $313. If that is the case, we still have a potential level of resistance up there for UNH at $327. UNH failed at $328 back on May 20th and also back on May 14th. And to the downside, and if this stock gets killed once again, which could be the case, that's a major downtrend below a lot of downtrending moving averages. Take a look. And once again, guys, anchored VWAPs, anchored volume weighted average price lines. Take a look at this VWAP that comes from, this is May 15th. On May 15th, UNH reached $248. That was the low so far for this collapse that we have been seeing in the case of UnitedHealth. So the average market participant that started a position in UNH back on May 15th has an average price as of now of $293. And take a look at how they have been defending price. We have seen 2 tests so far of this anchor VWAP. So in other words, the average market participant that started a position on UNH at $248 has had the opportunity of closing their positions or his or her position, breaking even, but they have added to their positions rather than selling. That's positive. So this is a potential level of support to the downside, 293-ish. But in my opinion, guys, a no touch below the 5 DMA, below 311 as of now. Yeah. Alrighty. What other request do I have here? Meta. We can do Meta. We can go over Meta. How long? Let me see. 55 minutes in. It's been a long day for me, guys. So, and I always tell you this, and I must sound like a broken record, but before going live for you guys on Tuesdays or Thursdays, I already streamed for the members of my Patreon in Spanish throughout the whole trading session. So when I go live for you, I am very tired, needless to say. Yeah. Oh, by the way, on the new server, on the new Discord in English, I am here and there also dropping by. We have a voice chat, and I answer your questions over there during the trading sessions. So 55 minutes. Let's go over Hood, right? Robinhood markets. Hood. Okay. Very good looking chart, guys. So Robinhood went down today, as most stocks did today. 2.35%. It closed the trend session at $75. Very good looking chart, guys. Above all the moving averages, above the 200, 150, 20-day moving average, above the 5 DMA. By the way, guys, the quote-unquote S&P 500 inclusion is still pending. And if we judge the net aggregate opinion of the markets, I think that the collective wisdom of the markets is perceiving that Robinhood will end up being added into the S&P 500, guys. Yeah, take a look. No profit taken. And despite the fact that 2 weeks ago, Hood was supposedly going to be added into the S&P 500, that didn't happen. No stock was added into the S&P 500. But take a look at this uptrend, guys. So if we evaluate again the net aggregate opinion of the markets, I think that we can make a case, guys, that the collective wisdom of the markets is letting us know that the inclusion into the S&P 500 might be taking place sooner rather than later. And that would be a very bullish development for HUD, needless to say. So I would be very bullish about the 5-day moving average, this white line that is signaling as of now $75. HUD closes candles above $75. That is bullish, and that could be suggesting that we have all-time highs coming up once again, or that we have a potential test of all-time highs coming up for Hood at $80. A very good looking chart. Say that the bulls lose the 5 DMA, I would be expecting potential support at this rising 20-day moving average at $69. Very good looking chart, guys. Yeah, nothing negative to say about Robinhood markets. Let me take a look. I am not going to, there's no need to take a look at Anchor VWAPs, guys, because this stock is pretty much trading at all-time highs. So we didn't have any buyers trapped, or we didn't have a lot of buyers trapped above the current price of Hood. But rather, let's go see the market structure of Robinhood. And let's see, what do we see here? Hood. Okay, and there it is. And ta-da! The demand is starting to go down, guys, but the supply is also going down. So, I mean, we can make a case that this market structure chart looks neutral. So we need to reconcile it with the technical chart of Hood, in which we can make a case that this stock is under the total control of buyers and that we potentially have higher prices coming up for Hood. There you go. Do you know when the addition of Hood will be happening? No idea. But again, guys, you need to interpret. You need to be able to you need to be able to figure out the message that a technical chart is sending you. This stock is a candidate in order to be added into the S&P 500. So the inclusion didn't happen a week or 2 weeks ago. Have we seen profit taken here? No. So what message is the chart sending us? that the inclusion might be taking place. Might is the key word here. Well, that would be a very bullish development. Sure. Meta. Yeah, I was about to go over Meta. Let's go see. Meta down today 0.70%, closed the trading session at $697. Another very good looking chart, guys. Above all the moving averages. Guys, as you guys can tell, most of the charts that we are reviewing today look bullish. That's why I don't buy the bullshit about the Middle East and the end of the world and Israel is going to destroy Iran and we are going to have a chaotic situation in the Middle East. So today we had an nasty day. We saw a lot of profit taking, which is okay, guys, because on top of that, tomorrow we have the Federal Open Market Committee taking place. So why not, removing some chips off the table? That's good. That's okay. But most technical charts out there look bullish. So unless, I don't know, Powell comes out tomorrow with a very huge surprise for the markets, I don't know, maybe letting us know that he's thinking about hiking rates rather than cutting rates in September. Because the Fed is supposedly cutting rates in September. Supposedly. Or I don't know, or maybe this time around is different. Maybe Israel and the U.S., I don't know, really attack Iran overnight with a lot of strength, let's just put it that way, or a massive attack occurs against Iran in the upcoming hours. You never know, guys. But I don't see anything bearish out there, to be honest with you. I think that we are headed I think that more likely than not we are headed to all-time highs in the near term, by the way, in the SPY, unless something unexpected happens. You never know. Or maybe Trump goes crazy on Friday and he says that he will raise tariffs up to 500%. Who knows? Oh, by the way, guys, next Friday we have quadruple witching. Keep that in mind. Do you know what is it? Quadruple witching? That's a day, or that's a trading session that takes place 4 times a year. And we are going to have a massive expiration of options. And during those trading sessions, usually weird stuff happens. Meta, while sustaining price above the 5 DMA, $692, I think that we have higher prices coming up for Meta. Let me zoom out here. A potential process of consolidation above $692 could open the door for a test of $710, previous level of resistance back from June 11th. A very good looking chart, guys. Says that this 5 DMA is broken to the downside. We have a previous level of resistance here that is pretty much coinciding with this rising 20-day moving average at $671. Buyers could be potentially defending price down there. This is a very good looking chart. Let me take a look at the market structure of Meta. What do we see here? Let's go see. Demand and supply. Is there something meaningful? Take a look. The supply sellers. Remember, this is a market structure chart. So what you guys see on top is the demand, which is starting to decrease. It is starting to go down a bit. Nothing alarming. And take a look at the supply, guys. The supply is collapsing. So that implies that in minor time frames, we have more buyers than sellers. And we can reconcile that market structure chart with the fact that Meta is trading above the 5-day moving average. So above 693, maybe the door opens for $708. And if this 5-day moving average breaks, I would be curious about potential support near $670. And if we take a look at anchor VWAPs, I don't think we have buyers or a lot of buyers trapped above the current price of Meta. So for that matter, we need to take a look. We need to go see an anchor VWAP that comes from all-time highs. And take a look, guys. And a VWAP that comes from all-time highs is signaling as of now $601. A very good looking chart. So if the SPY goes back to all-time highs, which who knows, I think it could be the case, Meta should follow suit. And Amazon as well. Yeah, Oracle, yeah. ORCL, what a beast. Oracle. I got some shares of Oracle today, by the way, full disclosure. So profit taking here, guys. Oracle went down today 1.38% and it closed the trading session at $208. So a bit extended to the upside. Take a look, guys. When the trading session opened today, Oracle was trading, take a look, almost 20% above its 20-day moving average. When a stock is trading more than 20% above its 20 DMA, above its 20-day moving average, I consider that stock to be a bit extended to the upside. So I'm careful there. The 5-day moving average is clearly upward sloping. It is rising. Take a look. This in white, the line that I am pointing out with my mouse over here. And take a look at how the 5 DMA, the 5-day moving average, is coinciding with a previous level of resistance for Oracle back from June 12th. So this is a potential level of resistance. And remember, I always told you that the slope of a moving average is very important, guys. When a moving average is upward sloping, it is pushing price up. And the opposite happens when you see a moving average downward sloping. It is potentially pushing price down. So this is a potential level of support for the bulls. 202. And by the way, guys, this company, and you know that I trade earnings, not with calls or puts. I wait for the earnings report to come out. And if I like the report, and if the reaction of the market is positive, and if the report itself is good when it comes to guidance and, and EPS and revenue. So when certain conditions met, I trade earnings with shares. The earnings report that Oracle recently reported was insane, guys. That report was some sort of Nvidia-like report. Unbelievable. They raised guidance across the board for 2026. So we have an uptrend that occurred because this company reported a way, way, way better than expected earnings report. So I think this dip in regular market conditions gets bought up, in my opinion. So this is a level of interest, $202. A rising 5-day moving average that is coinciding with a previous level of resistance back from a few days ago. I think that Oracle has a fair shot at bouncing back up from this level. Let me take a look at the market structure of Oracle. ORCL. The demand and the supply. Take a look at this, guys. The supply is going down. This is a tool that I use on a daily basis, guys, in order to make my trading decisions. Take a look at the demand. Remember, the blue shaded region, it is through the roof. If we reconcile this market structure chart with this 4-hour chart, what do we find? A rising 5-day moving average at $201 to 202 that could be potentially acting as support. If that 5 DMA is broken to the downside, I would be curious about support at around let me see. Yeah, this is a previous support, 189. That could be the case. In my opinion, guys, this dip gets bought up. Unless something unexpected happens for the markets and a bear market kicks off or something like that. I don't know, because of the war or because of tariffs or because of, Powell is going to be hiking rates instead of cutting rates. But this dip gets bought up. More likely than not, in my opinion. Well, guys, I have to wrap it up. It's been a long day for me. An hour and 8 minutes. Thank you very much for showing up. Thank you for watching. Thank you for listening. And I will see you guys tomorrow on Discord, on both servers. Chris Haynes, my friend, and mine as well. So, see you guys tomorrow. I think that we might have some fun tomorrow with the Federal Open Market Committee. Thank you very much. Go grab a beer. Do me a favor. I am about to grab a beer, guys. Yeah. I'm about to grab a beer. I deserve it. So, it's been a long day. Thank you, guys. Enjoy the rest of your day, okay? Take care. Thank you. Bye-bye. Thanks. Hey, for the ones that live in Charlotte, please send me a direct message, a DM. So maybe we can meet in person. 100%. Yeah, someone said that is from Charlotte. Please send me a a direct message or an email, okay? So we can meet in person. Sure. I am always willing to meet you guys in person. I love it, actually. I love it. Super fun. Yeah. We can meet at the Optimist Hall. Bye, guys. Cheers. Enjoy the rest of your day. Bye-bye. Bye-bye. Take care.